All right, guys, so before I go deeply into this video, please, I have flu or catarrh. Okay, so if I cough or sneeze during the video, or if you hear any background sound, I apologize in advance. So without much ado, let's dive into today's topic. Okay, because there was a rate cut on 29th, but the market is going downhill. Like Bitcoin is dropped to $108,000. BNB is almost back to 900. Solana went back to $180. Ethereum went down to 3008, even below that. So why is it happening? Now, if you have been a student of my videos, you understand what happened. And today I'm going to use chart to show it to you guys. But before I go to chart, let me tell you what happened. Okay? Before any event, major event that moves the market, either in a bullish or a bearish situation, okay, or any event that will influence the market, there are people who go and position themselves. So they buy in before the event, and during the event or some days after the event, they start selling. Why? Because they view it that at the peak of this event is where liquidity is going to be most. So if somebody buys a coin or Bitcoin for $1 million and he wants to guarantee that when he sells in the spot market, okay, that there will be enough liquidity that will give him his money back with his profit intact, he's going to do it at the peak of the event. And that's why I call it a liquidity event. A liquidity event is an event that occurs that ensures that there is enough players in the market, there is enough buyers in the market, that when the seller sells, he does not tank the market in the process, and also he ensures that he gets his profit. Because when it comes to an order book, there are different prices. Not everybody will put $1 million as their buy order. Are you get what I'm saying? So you see $10,000, $50,000. So the liquidity event is what guarantees them that when they go to the market and sell, they will have enough buyers within the price they want to sell that will guarantee them their capital and their profit back. So let's go to the chart so that I will show it to you guys, so that you pay attention, so that when events happen that is supposed to move the market occurs, but you're seeing the opposite reaction, just know that there are players who are buying into the market with the sole purpose to sell and make money. They don't care about the vision of crypto. All they care about is buy, sell, and take their money and their profit. So let's go to the chart. In this chart, okay, we're going to use Bitcoin, then we're going to use another coin to prove that this is consistent. Okay, now this is the 4-hour candle. The reason I use the 4-hour candle is that it gives us a view of transactions that occurred between the 24th of October to 30th of October. Okay, all right. So when was the FOMC meeting where it was called? The meeting was on the 29th. This is, are you seeing it? 29th. Okay, now 5 days before the 29th, the market started rallying, which is on the 24th. 5 days before. Are you seeing it? On the 24th. Now let's look at the market. You see, are you seeing where the market is on the 24th? It started rallying. Okay, sorry, this is 22nd. Sorry, this is 22nd. It started rallying on the 22nd. This is them, those people, those traders buying and positioning themselves. You can see it. Started going up. 111, 110, 100, and are you seeing it? This 25th, it started going up 111. Okay, this is those people positioning, those players that are major traders positioning, buying up coins. And guess what? Bitcoin reached $116,000. Okay, before going down to 115. Before closing, the candle closed at 115. All right. Now, as we get close to the event date, which is on the 29th, you can see on the 27th it dipped a little, then went up again. You know what I'm saying? Okay, reaching to as high as 116 again. Then the candle closed at 114,000. And when on the 28th it maintained like 113. And then on the 29th, when the announcement was made, the market started going downhill. So here is the liquidity event date. So this event here, with the positive announcement that there is rate cut, gave those traders the green light to start selling, because there will be enough liquidity in the market. Now, here is the thing. There is no guarantee there will be enough liquidity in the market. So when they flood the market with the coins to sell and take their profit, since there is not so many buyers who are FOMOing in, okay, it's going to result to the coin crashing in price. So hence we see this drop to as low as 108, continuous drop again to 107, continuous drop to 106, and now is gradually bouncing back. So you have to understand the importance of key events in the crypto space, because as we get closer to those key event dates, we are always going to see the market rally up. Okay, and after that event, we are going to see a massive dump of coins. Let's look at another coin again. Okay, let's look at another coin. Let's look at Solana. Okay, this is the 4-hour candle again. So this is 20, all right, 23rd. Opened on 23rd. It opened at 187, closed at 191 before the event. So you see it's pumping. 191, closed at 191. Okay, 191, closed at 192, reaching as high as 194. Okay, so it was all good. As we got closer to the liquidity event, are you seeing it? 197, closed at 199. I see it went up to as high as 204. This is on the 27th. Went to as high as 205 before closing at 200. This is on the 27th, still on 27th. On the 28th, went to as high as 201, closed at 202. Opened at 201, closed at 202. And then once we hit 29th, we started seeing the market, because this is a liquidity event, it starts dropping again. So if you are a trader and you have huge capital, you can do what these guys are doing, which is take note of FOMC meetings a day before, 3 days or 4 days before. Starts buying and push and positioning. A day before the liquidity event, start selling. It's a simple strategy if you want to trade. Now, this is not financial advice. I don't do this, but this is the pattern I have recognized, and I've said it time and time again. Now, are we ever going to get to a bull market? Yes. But the bull market does not occur does not take place with corporate organizations, hedge funds, corporate traders. No, it's retail that causes bull run. And right now, the retail market is still in survival mode, looking for money to eat, pay rent, and other stuff. Once they are satisfied, and once this rate cut that's happening starts reaching, giving them extra money in their pocket, that is when we're going to see the next bull run. Otherwise, we're going to continue to see these corporate trading manipulations by people with deep pockets that have money to spare to buy before an event and sell a day or on the same day, a day before or on the day of the event, or the liquidity event happening. If you have a contrary opinion, I'd like to hear it in the comment section. Till I see you guys next time. Take care. Remain blessed. None of this is financial advice. Bye for now.